All right. It is 7 p.m. here on the East Coast. So I think everybody here is on the East Coast. So it's 7 p.m. for everybody. My name is Alex Brashears. I'm the admin for Hampton Roads, Multifamily, and more. And tonight we are super, super happy to have David with us this evening. I'm going to let David do his intro, but he is a multifamily broker. He's based in Richmond, but his primary market for selling and assets is actually here in Hampton Roads. And I routinely get pinged messages. Do I know any multifamily brokers in Hampton Roads that would like to work with newer investors? And finally, David appeared on my radar and we just kind of hit it off. And I thought this would be a great opportunity to present to the group an opportunity to talk to someone who is local here in the Hampton Roads market, actively working in the multifamily space, because as we know, it's kind of a crazy market right now in the multifamily space, especially a lot of stuff going way over asking for just kind of insane numbers. So I thought I'd have David come in and have a nice little talk with the group, give his kind of perspective of what the properties in this market are doing and what he's seen as a multifamily broker, and also to pass on some additional information. So without further ado, I'll pass it on to David.
Well, thank you so much, Alex. I'm very excited for this opportunity that you're giving me to kind of introduce myself to this great community we have here in the Hampton Road market. I see that Jonathan, you just met Jonathan a couple of times, gave him a tour on some of my listings. So great seeing you here. So yeah, let's get this begin. So my name is David Chae. I work for Marcus Millichap. I'm in a group called the Zoom group. We are consist of 6 agents here. I want to let me share this slide with you. So yeah, so this is our team brochure. Here it is. So this is Altai over here. If you're multifamily asset owners here in the Hampton Road market, you probably have either spoken to Altai, Justin, Theo, and I. Like what I said, we are consist of 5 agents here that cover Southern Virginia, all the way up from Arlington, Alexandria, down to Durham and Raleigh market. Altai, Justin, and myself specialized in multifamily asset road market. And we have a Kyle Gross here as our partner who focuses more in the North Carolina market. So little about our team. We had 28 actually transitions last year with just multifamily assets, which, we did the math and got the figures down, which was 48% of the market share. So that being said, we are in every other transition or transaction, so we are getting a lot of data. We are talking to a lot of people and we're building relationships in this market. So as you can see here are some of the closings that we had last year. I've told Tanya we do work with small properties as well. The smallest property we have ever worked with is a 4-unit deal. Some of them being, duplex portfolios, etc. And going all the way up to like here, you could see Miran Amara Garden apartment, 251 units, 104 units, and it goes on. But our specialty really comes in for the smaller size, anywhere from 5 to 100. That's where we are dominating the market at. So, we have great numbers of sales comp, rank comps, and market updates of how things are moving in the market. So here are some of our other listings. We do also, we are primarily located in the Hampton Road market, but we do have clients that we have built our trust and relationships with. And, we've worked with previous years and show them what we could do and how, we serve them as advisors and made them money. So, they always reach us to ask, to kind of list their property out of Virginia as well. As you could see, we have a listing that we sold for our client in New Orleans, Alabama, and etc. So yeah, with that being said, today I kind of want to make this short and fast, but I want you guys to kind of get these good numbers for you. So here's a graph. I know with the COVID of 2020 and the pandemic, the market yet to be surmounted on some of the lingering COVID-19 uncertainty.
David, we don't see a graph. We just still have your other slides. The contact us slide is what we can see.
Okay. Yeah, can we see that?
You are
Perfect.
good to
Yeah.
go.
With the COVID-19 restrictions, we aren't really sure how the market is trending and what our things are going like in the Hampton Road market. But with the vaccine distribution for the shadow of optimistic outlook for apartment owners in the Tidewater area, unlike Washington, D.C., Los Angeles, Boston, and, other large city metros, which experience a massive downtown exodus. Unlike Hampton Road reached the historical low vacancy in 2020, Summer Fly forces property managers in these markets to offer discount on some of the national highest price units. We do know that New York, Boston, Los Angeles, those have, the massive, expensive multifamily asset where they did see a crazy discount offering when it came to pandemic. Unlike Hampton Road, Norfolk Market asking rent increased by 5% within a year. Stable demand throwing a period in high supply was likely the reason these high vacancy and record-setting rent grow. The large military presence in the area supported a consistent demand for multifamily in 2020. I'm sure all of you guys know Norfolk is the home of the largest naval station in the world and a large port market, which attracted industrial development throughout the pandemic. Development like Amazon operation expanding the shipbuilding industry has only complemented the base military economy in the region, but of course, no local economy. One I scared of virus impact. April, the market in Norfolk area, we did see an 11% unemployment rate, nearly 870,000 jobs being lost. But by December of 2020, 70% of the employment was recovered, being that backed up by a lot of military jobs being promoted here and a lot of government backed up solution. By taking a look at this graph right here, Norfolk one bed rent trend 2021. This is a line graph, one bedroom daily ask rent index to 100 in January 2020. Here we could see Hampton Road rents and green. So green is the Norfolk market, as we could see how it's increasing as always. This gray line is the national average for a one bedroom drop. And as throughout this year as go on, you see that it's constantly dropping where it's Norfolk area, it keeps rising and rising. I'm gonna share another graph with you guys. Bear with me for a second. I wanna share this other graph I have.
What's up, Jay New?
What's going on, Brody?
Do you see this graph, Alex?
We see the your PC folders screen, so not the graph by itself. Now we see the graph.
Perfect. So this is the Norfolk one bedroom average rent trend going into 2021, difference between the urban and suburb. As of course you see compared to the other chart, national average, it is increasing as the times go on. So, it is a high potential coming into the Norfolk market, and it is a hot market. Like what Alex said earlier, a lot of things are going listed above price. Primary reason being that what I say, a lot of job has been backed up by military. A lot of outside state capitals are flowing into the market. 90% of our sales last year's were out of state capitals. And of course, when these people, investors coming from New York, California, Texas, Jersey, they don't see this type of asset with this type of cap rate and NOI in this market. That's why they're getting very aggressive into these Norfolk market area along with the Hampton. Share another graph. So this is the trend that we saw in 2020 with the national multifamily asset with the rent increase. You could see that as a Norfolk, Virginia was ranked number 3 in the nation after the Inland Island and Sacramento, and Richmond coming number 4, where this green line is the market average. So we do see a significant rent growth that in 2021, despite of COVID, when everyone was kind of being scared, pandemic is happening and we have to get out of our certain assets and stuff like that. But and I think that primary reason of some of these people were forced to work from their home. Their downtown studio 1 bedrooms were placed from a sleep to workplace that shifted by dining restriction, amenities, and that previously gone them into a door tenant. Started searching for more spacious option on a net average 1 bedroom apartment. DC is about 700 square feet with average rent per square feet, and where you're at $3 in downtown Norfolk, the average rent is about 35 square feet larger than any other major city. So we are seeing a lot of trends of big city people coming into the Norfolk Hampton Road market, since a lot of people are able to work from virtually, where they do not physically have to be in the office. So why paying $1,600 to stay in a studio in DC when you could come to Norfolk, downtown Ghent area and rent out a place for $1,200? And possibly even getting up in a 2 bedroom and converting one of the bedroom into a work office that you could kind of combine your work into. This is not as easy as it looks. I'm trying to pull up all these graphs and why talk. And so Aaron last week made it super easy. I did prepare myself, but I feel like this, you just got to go with the flow. So I'm going to go with the flow. So bear with me. So this is another chart. It's an estimated apartment demand by month to month. As this yellow shows us the demand of the need of the apartments in the Hampton Road market, whereas this average they have from 2017 into 2019. So as you can see, as the times go on, even with the pandemic, the growth and the demand of the apartment in Hampton Road market have grew significantly. Some of these months doubled or quadrupled. Norfolk market, Hampton Road market definitely is the hot market that you want to be in. Last but not least, this is the apartment supply, demand, and vacancy chart that I would love to share with you guys. As you can see, the yellow indicates the quarterly changes in demand throughout from 2015 all the way to 2023, where we are projecting in the future forecast, quarterly change in supply in the blue, and vacancy rate. Even with the COVID-19, we expect high vacancy, but yet we had the lowest vacancy of all time. As you can see, it's dropping, and we are still seeing below 4% as going into the 2021. And this is actually an article that is published by CoStar that if you guys are interested, I want to share this information with you guys. If you guys shoot me an email through my work email, I would love to send this to you guys. I can't send it directly into the message since CoStar does charge for a subscription service, but there's a way for myself and my team to kind of send this out to you. It's a 9-minute video of describing how things are moving into the market and what we are seeing, and more in detail with all these charts that I kind of briefly described. So next things, what my team and I, we do, and what we could help you as a multifamily asset investor is we offer this service with no obligation. It's called broker opinion of value. What it is, it allows us to kind of value your property with the market condition. We've done plenty of those for Mr. Jonathan over there, so I'm sure he's very familiar with it. So I want to share one of the example for you guys to kind of see what it is and how it could help you as a multifamily asset, owner or future buyers. So this is the package that, once we kind of sent out. So for us to put up this broker opinion of value, what we would need is a rent roll of your property. And if you could give us some of the expenses you're currently taking on, that would be wonderful. But that is not necessary. My team and I, we do a very good job of putting this in. We underwrite a lot of property like how a bank would underwrite it. So even though you might not have certain details on your operating statement, we will put it. One example is like operating reserves. Not a lot of people have operated reserves on their underwriting part of it, but my team and I, we do put them in. Some banks do require, so we are underwriting this conservatively rather than liberally and giving you a correct information than incorrect. So the package start off with the term introduction of $280 million, 127 transitions that we did with my partner here, Altai, Justin, Kyle, and myself. And a little brief overall of why Marcus Millichap, what Marcus and Millichap differ from other commercial real estate companies. We do have our specialties. We are specialized in products. So for example, my team, the Zoom group here, we are we are specialists in multifamily asset. We do not do any net to lease, ground development, or anything like that, unless it's a special occasion, a client that we have worked with who does need help. In that sense, we will bring in our other team within the group to kind of help the process out. Another, attractive thing about Marcus and Millichap, we do have the largest pool of 1031 exchange buyers. We work in a whole team. Every Monday, we do have a regional meeting that all the agents come in together and we talk about possible listings they have, and possible buyers they're looking for, along with some clients, they're, the product type they're looking for into the 1031 exchange. So, when you hire us, the Zoom group here at Marcus and Millichap, you're not just getting 5 of our agents here, but you're getting 2,000 agents throughout the country along with Canada platform. Once, another process is how we kind of target our buyers. Like what I said, 90% of our buyers last year came from out of state capital. It comes from tier 1, tier 2, tier 3, some of them being foreign and international buyer. We did have a listing last year that we brought an international buyer from Israel who are very aggressive in their pricing. And they like the Hampton Roads market, a lot of cash flowing into this market because of how unemployment have changed and what is behind this market with the government support of the military employment. Another thing is some of the referrals that we may have from some of the clients we worked for, and marketing timeline strategy. If you were to kind of list this property, how we would take this out to the market and what we would do, paragraph, month 1, first week, where, a couple of weeks of the strategy marketing timeline, we would send our professional photographer with the drone shots flying out there and kind of getting a very nice footage, attractive footage. So, once you kind of out e-blast is this, platform of your product, we will catch people's attention as going on to the national marketing outreach, along with review offers and escrows and closing from month 1 through 6. Here are some of the national platforms that we use to kind of market your property into the market. We do a very good job of, e-blast that we have. Most of these e-blast clients that they're getting, these are people we have spoken to. These are qualified buyers. These are multifamily assets owner throughout the country. And there's about 16,000 of those people that get these e-blasts. So, that's a relationship we have built. It's giving them the first sight to kind of look at the property and review their underwriting before it even hits the market. So, 1 second. So once we kind of, sorry, I had to switch into offering memorandum, which is very similar to a broken opinion of value. So for example, if you were a owner of a 4026 Tidewater Drive and you sent us a rent roll and some of the expenses, Then we kind of underwrite it how we would, and we kind of, get a good pictures out there and show, what we could do for you, how your property is operating. And, this doesn't necessarily mean that we're trying to get you to sell the property. We want to serve you as an advisor, and we kind of want to show you where your property stands in the market. And the way how we do that is kind of showing you the current rent roll and the sales comps in the area. For example, this property here, they're collecting $746 in one bedroom rent, whereas the average in that market around the radius is collecting $825, and some of your neighbors' property what they're collecting for, to show you that how much growth that there is in your property and how you could kind of achieve that rent, along with the 2-bedroom ones. And here are some of the similarity of the properties nearby it, with their sizes, the unit size, average price of how, if you were to end up sell this property, where your property stands and how it is compared to other property. So, this is a service that we charge, not charge, do for free, for no obligation, to kind of build relationships with. We do put this up to kind of, us putting, I think people get a confusing of, hey, if I send this out to you, doesn't it mean that, you want me to sell the property? Oh, absolutely not. We're doing this because we want to kind of serve you as an advisor, where, our team consists of, very young man. We're here for the long term. We're not here for the short term. So we're here to build relationship with everyone, and we want to help everyone, and hopefully could get every multifamily out there in the Norfolk or Hampton Road market, compared to giving it to someone in the out-of-state capital. So, this is a free of charge, no obligation fee that we do for you to bring value in. And once we kind of put this up, and what we could do as an advisor is, how you should operate this property going forward. If you're first-time investors, you might not be getting the rent you want, just like the BOV you saw, where they are under $200 in market average rent. We as an advisor, we could kind of connect you with someone, or we could help yourself and give you ideas and plan how you would be able to achieve those price. And you definitely do not want to go in and say, oh my god, David just put this BOV for me and I think $200 less than the market average, so next month I'm going to raise $200 on my rent. That is the worst mistake you can do. You definitely don't want to scare those tenants away. Tenants are the key to cash flow. No tenants, you're not going to make money. So, we help you as an advisor, what you could do, what type of renovation you might need, or some, renovation that is not necessary to achieve those rates. So, those are some plans that we could sell you. And, if you are currently collecting above market average, great. But, it could be a possibility for you to kind of think that, hey, maybe it's time for you to sell and look into different assets that you could grow your portfolio into, or, 1031 exchanging into other property where there are value adds for you to grow, rather than just a little cash flow and little potential. So, yeah, I mean, Alex did leave my email address on the chat. So if you are a multifamily asset owner here in Hampton Road area and you want a valuation done on your property, feel free to reach out to me. If not, if you do not have multifamily asset, reach out to me as well. I'd love to send you guys that CoStar article. I think it would be a great helpful for you guys. I mean, they do mention that how Norfolk Market is expecting a 8.5% rent increase going into 2021. So these are some valuable data and knowledge for you guys to have as a multifamily asset or investors that's going into your first deals.
So we do have a couple questions, David, that were in the chat, and one of them came from your favorite friend, Mr. Jonathan New. But he said, can you describe the strategy of unpriced while having a whisper price?
So, I mean, This is a good question. I mean, it is a hot market, as I'm sure Mr. Jonathan. We kind of took you to a couple other, showings we did see, and whether those prices are too high, things get outbid and stuff like that. And I'm gonna be honest with you, if you are a seller at the current market with the way how market conditions are, you definitely don't want to sell your property off market, because of how much bidding processes are working right now. For example, the property I just showed you, the BOV on the Chesapeake and Tidewater, the day one, we had already $300,000 above listed price. And the reason why the buyer submitted that type of offer is because he did not want to create a competitive bidding process where he just want to say, hey, I'm paying the premium, so cut this competition out of my site, so let me have this deal. But as a buyer, this is not necessarily what you want. You want to pay. Our parents always tell us you want to buy low, sell high. They never tell us, you want to buy high, sell high. So it is type of hard, but I think that's a great question. I think one thing that we do as an advisor is that we do talk to a lot of our clients sometimes. They do actually want to sell off market property. They don't want to list the property. They always ask us, hey, bring me a buyer. I don't want to list my property. The reason why is I don't want to do many more tours. I don't want to scare my tenants. So, if you want to bring me a buyer, I'm willing to sell it. So, that's the relationship that we built throughout the times. For example, for Mr. Jonathan, I know his group pretty well. I know what type of assets they own and stuff. And definitely, if I have something coming in with clients telling me I want to buy it off market that fits into your criteria, Mr. Jonathan, I'll definitely reach out to you and your group. Okay.
And then I had a question that came in. The BOV had cap rates on it for past sales. Yep. Do you project any more cap rate compression in the future in 2021?
That's a great question. I mean, things are definitely changing. I mean, I would say 2-3 years ago, you weren't seeing 7% cap rates in Norfolk, Hampton Road market. You were seeing more close to 10, 9, or anything like that. Now, most of our deals that we are selling is right at 6%. We're in between 7%. So I can see it, but I think that also changes the way how our interest rate is going to be how the economy is going forward with the interest rate. If I could predict the future, I wouldn't be here, right? So I can't really tell you, how it is going to be. But I think that we would still have a pretty solid year. I don't think the government has enough time to really do much on it. But I could see us, kind of facing a little challenges as, the rates kind of creep up certain percentages.
Perfect. And if anybody has any other questions, feel free to unmute yourself or go ahead and type them in the chat to David. His email address is in the chat. So if you want to reach out to him about the CoStar additional information that he has to offer. And I have a question for the multifamily in this particular market. Since Hampton Roads is kind of a conglomerate of about 7 different cities, are you seeing kind of any differences in cap rates between the different cities that are here in Hampton Roads?
Absolutely. I mean, Ocean View area, I think, is very, very hot right now. A lot of, articles coming out with the city development. I believe 2017, where they had a plan to kind of make a destination vacation spot, but then it got shut down after phase 2, and that's coming back up again. The cap rate do changes depending on the location. I would say Ocean View area, definitely I can see high 5 towards 6.5%. More towards Azalea Garden Road. We are more towards the airport. We're seeing high 6 to low 7s. And of course, Gann area and Freemason downtown is different. You're seeing closer to 5 to 6%.
And what do you think about properties that are, say, in Virginia Beach or out in Portsmouth or maybe even Chesapeake?
Yeah, Portsmouth. I mean, we do have a couple listings in Portsmouth, and the cap rate we usually take it out to is about 6 to 7% as well. So in Hampton Road market, generally speaking, you are seeing 6 to 7%. I'm not 100% sure about the Suffolk market. We haven't really digged much into that area as well, but Portsmouth definitely 6 to 7%. Ocean View's, low 6 to mid 6, and then more towards the Norfolk area, we would say by the airport, Azalea Garden, places like that at 7 to 7.5% area for sure.
Okay. And then besides price, what do you think makes an offer the most competitive in this current market?
That's a great question. We actually, so I think besides the price, definitely your study period proof of fund that, you are very serious about deal. Back in the days, you would, put in a full price offer and you would say 30-day study period, 30-day closings. But what we are coming to realization is it's not about the price. Really, the sellers, they want a faster closing. So, we did see an offer that, closed that one because they did put in a 15-day study with 15-day closing with the proof of funds rather than, delaying additional 30 days from 30-day close study period and 30-day closing. So I think that being able to show the seller that you are very serious about it, the way to kind of stand yourself out is, hard money day one or hard money, as soon as possible, along with faster, study period and closing time for sure.
Absolutely. And for anybody that doesn't know what hard money is, or what the earnest money deposit going hard means, is it's non-refundable if the deal falls through.
Mhm.
Let's see.
I had a couple questions.
Okay.
So, dang, I got a lot of feedback here. Sorry. Hang on just a second. All right. So you talk about hard E&D. Obviously, that eliminates almost all of the sellers, or the buyers leverage, just in case they get in there and find absolutely nothing, or absolutely something that's worth walking away, but they can't walk away because they got hard E and stuff. How long do you think that's going to be a thing? Because the quicker that goes away, the better it's going to be the buyer.
No, absolutely. I mean, like what I said earlier, I think really the interest rate is, like, for example, that East Ocean View portfolio, we had it list. It's day one that we listed, I had 160 calls from people out of state, not even local buyers. So, like what I said earlier is these people don't see this type of deals in the states that they're currently in. That's why they're coming into this market where it's safe, where unemployment rate changed tremendously throughout the year because of those jobs are backed up by government. But, short answer is, until we see a correction, the way how we're really going to see correction is with the way government regulation and policy coming in. Until then, I really don't see much changing in the market.
Got it. Hey, fix my. All right. So my next question. We talk about pricing. Obviously, great. But there's also there's price per unit and like the 1% before. What method do you prefer to use?
I'm sorry, Jonathan, you were breaking up. Could you repeat that one more time?
All right, let me try this again. Can you hear me?
I can hear you.
Okay. Right. So we talk about pricing. There's cap rate, obviously, based on the income, which is what everybody knows. But there's also, price per door. There's price per square foot. There's like the 1% rule and all kinds of different crazy stuff. What is your go-to pricing method?
I think our go-to pricing method, at least for me, I think it's cap rate. And since we do have so many datas of what we have sold similar to the property, you could be selling, and it shows our average what those deals are selling for. And when you're looking at it and say, hey, this is 15% below market average of what it's sold for in the market, that's definitely an attraction. But my go-to evaluation of price on a property would say cap rate.
Fantastic. I love it. Does anybody else have any other questions for David? Is there anything else that David, you would like to share with the group?
I think be patient. I know everybody wants to jump in the multifamily asset. Um, Definitely, it's definitely, what a way to wealth is not, selling, or wholesaling or anything like that. It's owning real estate. And like what I say, our parents always tell us, buy low, sell high. And with the current market situation, it's not really ideal. But I think, it's being patient and, kind of studying and the other resources out there, keep up with the market, and try to get into something that makes sense to you rather than trying to rush in, because, that could come around and it just bite you in the butt. So you definitely want to do your study period of what you're supposed to do, underwrite how you would do. And since you guys here are a great, good community that's formed by investors, reach out to other fellows like, Mr. New. They're very successful. I know, they are doing great things in the market. Ask for other people's opinion. Don't be afraid to, shoot me a text or give me a, email and ask for my opinion. I'm not saying that my opinion is always right, but at least I could give you a feedback of what I think of it. So, definitely be patient, and it's an exciting market. We're here for a long time. So, let's get rolling and make some money.
Absolutely. Thank you. I appreciate it. So everybody, please reach out to David if you have any further questions about multifamily in this market. Obviously, he knows this market really well. So if you're new to this market, new to investing in multifamily, he can absolutely be a good resource. And like he mentioned, his brokerage, Marcus and Millichap, is representing the vast majority of the transactions in this market. So this would be a good place, like he talked about, having those access to those kind of sort of unofficial off-market deals, because they are doing so many transactions in our local market. So it's always good to kind of foster those relationships with someone that's doing so many transactions in our local market. So without further ado, I don't want to waste anybody's time or take up too much time for your evenings, but I want to thank everybody for coming. And if you have any other questions, please let us know. But otherwise, we will let David and let the rest of you go on with your evening. And I want to thank you, David, for taking some time out and doing this.
Thank you so much. And yeah, I mean, like what, Miss Tanya said over there, if you're a first time, buyer or doesn't even have multifamily asset, reach out to me, let me get to know you. And I'd love to, kind of, get a better understanding of you guys and help you guys out, throughout the year and, going forward with your investing career.
Fantastic. Thank you, everybody.
Thank you so much.